Pennsylvania has adopted the Internal Revenue Code, or IRC, for state income tax purposes. However, it's crucial to understand that while the state aligns with the federal code, there are some key differences between the Pennsylvania Income Tax Code and the IRC. These differences can impact how income is calculated and taxed at the state level. Pennsylvania's adoption of the IRC simplifies tax preparation for many residents, as it allows them to use the federal definition of income as a starting point for their state income tax return. However, taxpayers must be aware of the specific adjustments and modifications required by Pennsylvania law. One major area where differences may arise is in the treatment of deductions. While the IRC allows for a wide range of deductions, Pennsylvania may limit or disallow certain deductions for state income tax purposes. For example, Pennsylvania may have different rules regarding itemized deductions, such as those for medical expenses or charitable contributions. It's important to carefully review Pennsylvania's instructions and guidelines to determine which deductions are allowed and how they should be calculated. Another area of potential difference is in the taxation of certain types of income. Pennsylvania may have its own rules regarding the taxation of retirement income, investment income, or business income. For example, Pennsylvania may offer different exemptions or credits for certain types of retirement income, or it may have its own rules for determining the taxable income of businesses operating within the state. Taxpayers should be aware of these differences and ensure that they are properly reporting all sources of income on their Pennsylvania income tax return. In addition to deductions and income, Pennsylvania may also have its own rules regarding tax credits. Tax credits can directly reduce a taxpayer's tax liability, and Pennsylvania offers a variety of credits for things like education expenses, child care expenses, and energy-efficient home improvement. Taxpayers should explore the available credits to see if they qualify for any that could help reduce their tax burden. It's also worth noting that Pennsylvania's income tax laws are subject to change. The state legislature may amend the tax code from time to time, so it's important to stay up to date on the latest development. Taxpayers can consult the Pennsylvania Department of Revenue website or a qualified tax professional for the most current information. Understanding the nuances of Pennsylvania's income tax code is essential for all residents. By being aware of the differences between the state code and the IRC, taxpayers can ensure that they are accurately reporting their income and claiming all eligible deductions and credits. This can help them avoid potential penalties and ensure that they are paying the correct amount of tax. To ensure compliance with Pennsylvania's income tax laws, consider the following points. Firstly, familiarize yourself with the Pennsylvania Department of Revenue's website. This website contains a wealth of information about Pennsylvania's income tax laws, including publications, forms, and instructions. Secondly, keep accurate records of your income and expenses. This will make it easier to prepare your tax return and support any deductions or credits you claim. Thirdly, seek professional advice if needed. A qualified tax professional can help you navigate the complexities of Pennsylvania's income tax code and ensure that you are in compliance with the law. It's important to remember that Pennsylvania's income tax laws are complex and can be difficult to understand. By taking the time to educate yourself and seek professional assistance when needed, you can ensure that you are meeting your tax obligations and avoiding potential problems. In summary, while Pennsylvania has adopted the IRC, there are important differences to be aware of. Understanding these differences is crucial for accurate tax preparation and compliance with Pennsylvania law. Always refer to official sources and seek professional advice when necessary to ensure you are meeting your tax obligations correctly. Further elaborating on potential differences between the IRC and Pennsylvania's income tax code, it's vital to consider the specific definitions employed by each. While the IRC provides a comprehensive framework for defining various types of income, deductions, and credits, Pennsylvania may adopt slightly different definitions that can impact how these items are treated for state tax purposes. For instance, the definition of taxable income may vary between the IRC and Pennsylvania's code, leading to differences in the amount of income subject to state tax. Similarly, the definition of dependent may differ, affecting eligibility for certain tax credits or deductions. Another significant area of potential divergence lies in the treatment of pass-through entities, such as partnerships and S-corporations. Under the IRC, these entities are generally not subject to federal income tax at the entity level. Instead, their income and losses are passed through to the owners, who report them on their individual income tax returns. However, Pennsylvania may have its own rules regarding the taxation of pass-through entities, potentially imposing taxes at the entity level or modifying the way income and losses are allocated to owners. Furthermore, Pennsylvania may have specific rules regarding the taxation of non-resident individuals and businesses. Non-residents who earn income within Pennsylvania may be subject to state income tax on that income, and the rules for determining the amount of income subject to tax can be complex. Similarly, businesses that operate in Pennsylvania but are not headquartered there may be subject to state taxes, and the rules for calculating their taxable income can be challenging to navigate. In addition to these substantive differences, there may also be procedural differences between the IRC and Pennsylvania's income tax code. For example, the deadlines for filing tax returns and making tax payments may differ, as well as the procedures for appealing tax assessments or resolving tax disputes. Taxpayers should be aware of these procedural differences to ensure that they are meeting their obligations in a timely and proper manner. To stay informed about changes in Pennsylvania's income tax laws, taxpayers can sign up for email updates from the Pennsylvania Department of Revenue or follow the department on social media. They can also consult with a qualified tax professional who specializes in Pennsylvania tax law. In addition to understanding the differences between the IRC and Pennsylvania's income tax code, it's also important to be aware of any local income taxes that may apply. Some cities and municipalities in Pennsylvania impose their own income taxes, which are separate from the state income tax. These local income taxes can add to the overall tax burden for residents and businesses, and it's important to understand the rules and regulations that apply. The specific rules and regulations governing local income taxes can vary depending on the municipality. Some municipalities may impose a flat tax rate on all taxable income, while others may have a graduated tax rate structure. Additionally, the types of income that are subject to local income tax may differ from those that are subject to state income tax. To determine whether you are subject to local income tax, you should contact your local government or consult with a qualified tax professional. They can provide you with information about the local income tax rules and regulations that apply to your specific situation. It's also important to keep in mind that the rules and regulations governing local income taxes can change from time to time. It's important to stay up to date on the latest developments to ensure that you are in compliance with the law. By understanding the differences between the IRC, Pennsylvania's income tax code, and local income taxes, you can ensure that you are accurately reporting your income and paying the correct amount of tax. This can help you avoid potential penalties and ensure that you are meeting your tax obligations. Also, remember that tax laws can be complex and difficult to understand. If you have any questions or concerns about your tax obligations, you should consult with a qualified tax professional. They can provide you with personalized advice and guidance based on your specific situation. Furthermore, it is essential to maintain meticulous records of all income, expenses, and deductions throughout the tax year. These records serve as the foundation for accurate tax preparation and provide crucial documentation in the event of an audit or inquiry from tax authorities. Organizing and storing these records systematically can significantly streamline the tax filing process and minimize the risk of errors or omissions. Consider utilizing accounting software or spreadsheet programs to track financial transactions and categorize them appropriately for tax purposes. Additionally, keep digital or physical copies of all relevant documents, such as W-2 forms, 1099 forms, receipts, invoices, and bank statements. Regularly reconcile your financial records to ensure accuracy and identify any discrepancies promptly. By adopting diligent record-keeping practices, you can gain a clearer understanding of your financial situation and ensure that your tax returns are accurate and complete. This can save you time, money, and potential headaches in the long run. In addition to maintaining accurate records, it is also beneficial to familiarize yourself with the various tax forms and schedules that may be required when filing your Pennsylvania income tax return. The Pennsylvania Department of Revenue provides a comprehensive collection of forms and instructions on its website covering a wide range of tax situations and reporting requirements. Taking the time to review these forms and instructions can help you identify the specific forms that apply to your circumstances and ensure that you are completing them correctly. Pay close attention to the instructions provided for each form, as they often contain important information about eligibility requirements, calculation methods, and required documentation. If you are unsure about which forms to use or how to complete them, consult with a qualified tax professional for assistance. By proactively educating yourself about the available tax forms and schedules, you can simplify the tax filing process and reduce the risk of errors or omissions. This can help you avoid potential penalties and ensure that you are receiving all the tax benefits to which you are entitled. Remember that the Pennsylvania Department of Revenue also offers various online resources and tools to assist taxpayers with their tax obligations. These resources include online tax calculators, interactive tutorials, and frequently asked questions FAQ sections. Take advantage of these resources to gain a better understanding of Pennsylvania's income tax laws and to help you navigate the tax filing process more effectively. By utilizing the available online resources and tools, you can empower yourself to take control of your tax situation and ensure that you are meeting your tax obligations accurately and efficiently.